Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, April the 28th, 2016. My name is Doug McKay. I am the founder and head moderator of Quantum Leap Futures. Each morning we come together in these live sessions to put together our pre-market trade plan. We take a look at the market macro to micro, the structure of the market, then we drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room, so if you're interested in checking us out, I will put up my contact information in just 1 second. Before I do, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay. My contact information is quantumleapfutures@gmail.com. There is no website. There's no blog. This is not a commercial venture. We do this live session each morning, and then we do live trading and analysis during the course of the day. You will need a Skype account. We use a Skype chat, and you can do that. Open a Skype account for free. You can send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. And if you like this video, there's over 300 days up on YouTube that you can check out and check out the performance. Just do a search for Quantum Leap Futures. If you like what I do, please follow me at Crazy2 on Twitter. Okay, so yesterday we had a neutral day. Prior, we were looking for the possibility of a neutral day. We thought we'd get a lot of rotation. Our main hypothesis was a move down, chop on the open, a move down to the 75 level, and then finding responsive buyers and rotating up through and up towards that 91 and a quarter, which was a weak high from the last couple Globex sessions, and in the last RTH session we had two tops at 91 and a quarter and one at 91.50, and we did go up and we put in a double top at 94, and then we closed basically right around that 91. We closed right on the 91. Overnight, I was looking for continuation up to take out that double top and continue up towards the 2100s. Overnight, they one-ticked the 94, and then of course the big news last night was Bank of Japan coming out and saying that they're not going to do any further stimulus, and we had the huge drop, and currently we're trading at 77 and a quarter and a 20-point drop in the Globex. So each morning, well, let's take a look at the news first. We didn't get too much reaction. I thought we'd have more reaction off of the GDP numbers and the unemployment claims. They both came out, pretty much as expected, but we really didn't get much of reaction. We got like maybe a 6 to 8 tick reaction off of it. We're currently trading around that lower distribution of the triple distribution of the microcomposite, which we'll take a look at in around that 75 level. 10:30 we have natural gas storage, but there's basically no more news. And Japan, after they create the ruckus last night, they're on bank holiday today. So it's going to be an interesting day to see if we have support here in the 75 to 69, 75 area and then bounce, or whether or not this move down overnight could be the start of a possible larger rotation down towards that 64 gap zone and back towards the composite VPOC at 61 and a half. But we'll take a look at that in just a minute. But there's our news. Let's start with our normal routine. I always stick with the same routine every day. I start with a monthly chart, candlestick with a 9 EMA, 20 SMA. I'm looking for slope and separation, strength of the trend, where the trend is being challenged on the different time frames. Beautiful, several year upward trend on the monthly, and then at the end of the year we violated it, took it back, then beginning of this year we violated it again, and then March and April so far, we've taken it back and we're holding up there. I mean, key level, you can see, the hold is going to be in that 2020 area. My level that I'm using is 2016. That's the microcomposite LVN that we'll take a look at in just a minute. But the overall monthly is in consolidation, but holding above the key moving averages. Weekly, we've had a beautiful, strong move up on the weekly. We've got slope and separation. Price is paralleling the 9 nicely. The trend is up on the weekly. On the daily, we're seeing some challenge to the trend. We broke below the 9, and we tested the 20 on the news overnight. We went down, and our overnight low was 70.25, and that's sitting right on the 20 SMA on the daily. So we're inside of the 9 and the 20 right now on the daily, and we've got sideways consolidation. As we move down to the intraday, you can see we are seeing some rollover. We had rolled over last several sessions, and we were trending down. Then we went consolidation, had that nice pop-up, and then the big drop overnight, and now we're below the 9 and the 20, and we have a possible continuation pattern on the downward trend. There's a naked cross here at 2083.75. At 83.50 is going to be an important level above us. Going to the 1 hour, you can see that we did roll over. We got slope and separation. We're below the 9 and 20. We did create a technical gap with a Mr. Sneaky, and we've closed that technical gap, but we failed to get above the 9. There is another another naked cross up here at 2086, but the trend is starting to the downside on the 1 hour. On the 30-minute, you can see we've had that strong trend down all night long, and but now we're taking it back. We're above the 9. We're testing the 20 right now. There is a naked cross up here on the news at 89.50, 89.75. The scene of the crime for the Bank of Japan is up at 20.94. That's where we were trading when the news came out. And thank goodness for stops. I had gotten long at 92.50 and got funded, and I was in the trade for like 5 hours waiting for them to go up into that 96 area, and the Bank of Japan came out and dropped, and then I bought 77.25 and on some size, and it was a good trade. I actually made my week last night, and we'll talk about that in just a minute. So the 30-minute is challenging the downward trend right now, but we're still not above the 20 SMA. 15-minute, we have broken above. We've got the possibility of moving this back up. And again, another naked cross above us. There's a lot of naked crosses above us. Don't think we're going to get away from the upside targets too soon, but we could go down and, like I said, test that 60 area again. But sideways consolidation right now on the 15-minute, but we are above the 9 and the 20. And then the 5-minute sideways consolidation again, and we are trying to get above the 9, but are challenging it right now, but haven't completely got above it yet, and sideways consolidation. So taking a look at the big picture, again, putting this in context, end of last year, we were trading in this value area, this balance zone between 86.50 and 2008 with a double distribution microcomposite with the key MCLVN at 16. Nice Gaussian distribution with the microcomposite VPOC up here at 63.50. We fell out of it in January, went down and created that balance around the 1881 area, and then we started to work our way back up. And currently right now. We had found balance in around the 40.50. Accepted price just before the breakout at 48, and then we gapped up, created that gap zone between 64 and 58.50 with the naked close at 56. Right after the breakout, we accepted value at 75.50, and then we broke out again, came up, tried to hold value at 93. We couldn't hold value at 93. They came back to the 75 area, and then yesterday we moved back up into the 93. You can see that we have a triple distribution on the micro composite. Let me just. This is the current micro composite that we're in. You've got micro composite LVN at 2080.75 and 89.50, and the micro composite VPOC is at 85.50. The value area low, which we want to pay attention to today, is at 76. I'm going to still use that 75, which is the HVN and the former microcomposite VPOC from the 3 days of balance after the breakout. Below that, I'll be looking for a move back towards that 69.75, the former microcomposite VPOC and the composite HVN, and then a test of the top of that gap zone at 64, and move down in middle of the gap zone is actually the composite VPOC at 61.50. That's the most traded price going all the way back to the beginning of 2013, and then we've got the cluster down there at the 56 and 57 area. So let's take a look at overnight. You can see that we had a very, very tight range for most of the trading session until and it looked like they were going to, we had created a really weak high at 94. We had the two double top from the RTH session at 94, and then we put a couple more double tops up at 94, and then of course we one-ticked it just before the news, and then the news came back and bam. We came right back down into testing that 75.75. They found balance and just chopped around, worked our way back up to, I had told everybody that was trading last night at that time to target the 81.50, the return to the scene of the crime of the Fed announcement, and we chopped around that, and then came, fell out of that balance again, came down to that near that 69.75, got as low as the 70.25, and then they've worked their way back, and now we're just chopping around the 75.50 area, the lower distribution of the triple distribution microcomposite, and we created a distribution zone that goes from 83 down to 70.25 with the overnight VPOC at 76.75. So let's take a look at how we use those numbers. Obviously, we've got the Bank of Japan scene of the crime at 94, right at yesterday's high. We've got the overnight high at 94.25. Our daily ATR is running 21.04, so off of the bottom of the overnight low, which is at 70.25. Our upside ATR target actually is back up at that 91.25. Remember that 91.25 was that weak high that we had put in the Globex and the prior RTH session. Our daily downside target has already been breached on the Bank of Japan news. It's currently sitting at 73.25. So we've got to watch, this 76, 75, and 75.50 area as a very key area. That's going to be our key line in the sand today. I'm basically going to use the range low and that encompass that 75.50 area. So I'm going to put a double, and don't do this very often, but I'm going to put a double zone in here because it has to encompass this whole range between 75.50 and the value area low at 77. I don't want to be long unless we're above 77. I don't want to be short unless we're, I don't want to enter a short until we're below the 75.50 and we don't hold that microcomposite HVN. I'd be looking for a move down through the daily ATR target and to take out the overnight low and hit our main target below at 69.75 and possibly come down to this gap zone. You can see we've got so much down here in the gap zone. We've got the composite VPOC, we've got the naked VPOC, we've got the microcomposite VPOC from the last quarter of 2015, we've got the gap zone, we've got naked closes and naked VPOCs. There's a lot of confluence down here, and if we don't hold that 75 or the 70 level and bounce from there, we're likely to get a bigger move down into this level and chop around in here. And then all our levels below that all remain the same from what we've been looking at. You've got the 52.25, the 48, the 46, the 43, the microcomposite VPOC, which is the next big target under that 52, and then the year open at 37 and working our way down. We've got 2 days left in the week. Our weekly ATR is running 68,421. Our weekly downside target is 26. We still, haven't quite hit critical mass, but we're, our week open is 2091.50, so we haven't hit critical mass. But if we fall out of the current balance that we're in and come down into the 60 area, coming into Friday, we could see critical mass kick in. Our month open is 2052.75, so we're not likely to hit critical mass to the downside. We'd have to be looking to the upside. And if you take the 20-day ATR off of the 2052.75 and add 42 points, call it 43 points for the 2 days, our critical mass to the upside is going to kick in today somewhere above the 2095, 75, 2096. So I'm going to just put that in here. I'm going to use 96.50. Come on. Okay, and some of you probably don't know what critical mass is. Basically, it's a theory that if we get too far away from the month open and our number of days left times the 20-day ATR, a lot of times there's no chance for the opposing force, in this case the bears, to get back below the month open. So a lot of times the one side will step away, you get capitulation, and you'll drift. The other side takes over. In this case, the buyers take over and drift us up into the month end. But we don't get there today until we're above that 96. So inside of range, inside of value, if we open up here, the first area of concern, I don't need this, you can see that 83.50, we talked about that a little bit earlier, how important it's going to be, because if we get above that, then we've got this thin LVN area that goes all the way up into that 91 and a quarter, and we're likely to just go through this. So generally, I don't like to use the prior day VPOC as a trading level because it was price acceptance. I want price rejection, but I am going to use it today. I'm just going to put it a little bit higher at the 84, 50, 84, 75, 85 level, just where the VWAP and the midpoint was from yesterday. So, and there's not much to lean against inside of this 76 area, 77 area, and that 84. You can, if you want to be aggressive, we don't need this now, so let's just get rid of that. Oh, I've got to put the overnight VPOC in. Overnight VPOC is 76.75. And we don't need this. Expand this out. So we do have the microcomposite LVN at 80. There is an LVN in there as well. If you want to be aggressive, you can be aggressive, but I'm telling you, this is not a strong area to lean against right now. I think you're going to see a lot of chop coming into the open. We're going to get an open auction in range, possibly an open test drive, testing that 75.50 and the 83.50 on the market on open orders, and a return to the scene of the crime at 81.50. So just keep in mind, be patient this morning. Don't try to push a trade because it's going to have probably a pretty wide opening swing on the open. Of course, above the 80, I'd be looking for the 81.50 and the 83.50 and possible resistance coming in and responsive sellers stepping in up here. If we get above the 84, 85 area, the upper microcomposite LVN that separates the 3 distribution is up at the 89 area. You've got the 87.50 value area high. So again, that's going to be kind of a slush area between the 89 and the 87.50. And then above that, we've got a strong target up here. I think if we break out of this value and come up and get in the upper distribution from the prior day, we're going to return up into, take out this gap and move up into the overnight high and continuation towards that 96.50 and the 21. You've got trade levels above all remain the same, 98.50 resistance, 2175 first target into the 2100s, the all-time high at 2105, and then our rule of 10, and then our measured moves and our unequalized high, and the weekly ATR target is still up here at 2139. But I doubt we're going to hit either the high or the low on the weekly ATR target. So hypotheses. My main hypothesis is an open auction in range or an open test drive with a move to probably the 81.50, maybe 83.50 and 75.50, maybe the 73, but I'm expecting a pop and then a drop down towards this 69.75 and the 64. So chop on the open, maybe open test drive, come up into the 81.50 to the 83, chop and then fail and break down below the range and come into the overnight low and the 69 to 64 and chop around down in there, possibly even come down and take out some of these targets. That's hypothesis 1. Hypothesis 2 is a open auction in range, chop around the low of the day, maybe up to the scene of the crime, and then fail, come down, find responsive buyers down here in the 69.75, and then work our way back up through, break through value, and come up into that 91 and a quarter, possibly 94 area. That's hypothesis 2. And then a alternative hypothesis is we hold the range, hold the value, come up here, have an inside day, and chop around between the Bank of Japan scene of the crime and the Fed scene of the crime at 8150. And we just have an inside day and go sideways all day and not get any type of range expansion. So that's what I'm looking at in terms of the ES, in terms of my main hypothesis. Again, main hypothesis is a bit of a pop and then a drop. Second hypothesis is chop, move down, and then move up. Third hypothesis is chop around inside a value and inside a range between the Bank of Japan and the FOMC scene of the crime. Currently right now on the Keltner, we have the center line at 75.75. We are above it. A move up to test the upper line is going to bring us up into that 81.50 FOMC scene of the crime. A move below the 75 takes us down into that target down at 69 and the overnight low. So yeah, wonderful. This fits with our levels. Taking a quick look at the book map. Coming into the open, we have most of our liquidity is up here in the 81 area and down here in the 74 area. A little bit of liquidity here at 77, but that could disappear very quickly on the open. Taking a look at gold. Gold is coming up towards the breakout point. We have a nice move up overnight. The value area high of gold balance zone, the micro-composite balance zone, is right here where we're trading. We're trying to break out of it right now at 20.58. If they fail to break out, then I'd be looking for a move back down towards this 70 area, possibly even back down to the 35. But they're finding, they came back down and they found the buyers they were searching for right back at the composite VPOC. Remember, this composite VPOC goes all the way back to October of 2008. And it was down here at the 1204 and shifted up. So they're accepting value higher. They tried to break out. They failed to break out. They got the move back. And now they found the buyers and they're trying to break out again. So above the 50, 59, 58, 80 area, look for them to come up. First target's going to be the 67.80 and then 73.60 to 76 area becomes resistance, and any move above there, the main target above is going to be this 83 with the bigger target being up here with a test of the 1300s again. And a possible move into the 1300s. A failure to break out, they're going to have to come back down here again. The next time they come back down here again, they're likely not going to find the buyers that they found, and they'll probably have to come down and test lower inside of this range, somewhere down here in the 24, maybe even come back to the 1204. If you see composite VPOC shifts back down to 1204, all bets are off to the upside, and we're likely going to get a move back into the 1100s and probably the lower mid 1100s. First big target in the 1100s is down here at the 1156, 1157 area. So that's what I'm looking at, gang. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.